chief economic advisor, talks a bit about Britain selling its future to Wall Street. So I'm just going to quickly start off by showing you a clip that I think is useful, gives you a bit of context to what's going on.
Donald Trump's visit to the UK has seen a raft of deals unveiled, but is it enough to support the UK's flagging economy? Well, joining me now is Vicky Price, Chief Economic Advisor at the Centre for
Slow that down a little bit.
Thank you very much for taking the time for me today, Vicky. So US firms have committed £150 billion, nearly $200 billion in investments in the UK. So what type of deals are we talking about here?
Those are mainly in the AI sector, but they also look at not just data centers, which quite a lot of people are talking about and investing in, and we had a lot of interest in that for the UK, but also in relation to infrastructure itself, supercomputers. So we've seen Microsoft make a financial commitment to help build the UK's largest supercomputer in partnership with a British AI infrastructure provider called Nscale. So there is an element of British involvement in that as well. So yes, the US firms are coming. They're pledging quite a large sum of money. But first of all, the thing to remember is that it's over a number of years. So we are talking really about possibly.
Vicky talks about being a large sum of money. Now, I think just before we really unpack what she just said, I think US investors, whether that's private equity, hedge funds, they already play a strong role in the UK through, acquisition, capital injections, or equity stakes, and also in government as well. For instance, BlackRock has, publicly highlighted, them being a key investor in UK infrastructure projects. I think they put $500 million into data centers in the UK. They're in, local government pension schemes in the UK, use BlackRock as a vehicle to invest. They've also increased their stake in banks like NatWest. I actually think now they own a larger share in NatWest than the UK government. So maybe it isn't just Wall Street as a whole. Maybe it's just BlackRock. But I do think if we go back to US investors in general, I think the whole sort of fund model is changing rapidly. So investors have definitely switched their approach. They're looking for much shorter investment horizons, and they're putting a lot of pressure on quicker returns, which is very interesting based on how this has all been set up previously. And sometimes if you look at it in that way, it doesn't actually help the economy. When they do demand faster returns, it pushes firms really to prioritize, cost cuts, dividends, or some form of financial engineering rather than long-term investment. So, but on the flip side, I guess, increased capital flow and liquidity will, boost markets as well. So it's a bit of a double-edged sword on this one. But yeah, definitely let me know what your thoughts are, because, I remember seeing that famous, I think it was an image or a video, when Labour had just won the election, and around the table there's about 6 or 8 people, and one of them was Larry Fink, which